Good morning, everyone, and thank you very much for joining me. This is the morning market review with myself, Russell Shaw. I'm a senior market specialist at FXCM. Today is Thursday, it's the 16th of March, and my email address rshaw@fxcm.com. Just want to double check that you guys can see me, hear me, and see the screen. If you guys can just give me the 3 yeses. In the meantime, I'm going to bring up the high risk investment warning. I'll keep that on screen for a few moments. Okay, excellent. Thanks, Cedric. Hey, Mia, Anna, Howard, nice to see you guys on the webinar. Thank you, everyone, for joining. Pleasure to have you this morning. I'll just keep the high risk investment warning note on for a few moments. There's 2 charts I want to show you on TradingView. We'll do a NASDAQ 100 top-down analysis, take a look at the DAX and the Euro. We're going to have the ECB out today. And hey, Demir, good morning to you. And I think we're going to get 25 basis points there. I don't see President Lagarde going through with a full 50. Interesting after yesterday's discussion on the DAX, Mia, you were spot on. The DAX got hit heavily with the Credit Suisse news that came out yesterday. Let's take a look at market commentaries disclaimer here. All right, and just our references, market scope and trading view. All right, so the first chart I want to show is, we haven't looked at this for a while, the 2 series here. So the black line is the producer price index, the PPI, and the red is the core CPI. And we're just looking at the interaction between the 2 series. And if you go back to the 70s and the early 80s, that was the last real stagflationary period. You can see how the PPI led the core inflation up, but also led the core inflation down. And what's interesting to me is the crossovers. Okay, so kind of the crossover here. The crossover here. Sorry, that's not the, I want an ellipse. Yeah, there we go. The crossover there, and you can see how it leads the core number down, the core inflation. And we've just got a crossover with the PPI that came out yesterday. So it does look encouraging in terms of the inflation story. Now, this is not the end of the story. We've got to keep an eye on that median inflation. Unfortunately, it still hasn't been updated. I looked at it this morning. That's the real sticky stuff. We don't want to make an error here. We want to see if the PPI is indeed leading the core number down. So I want to say that it looks encouraging, but we still need to watch it very carefully. It's not final by any means. But then something else which I think ties in quite nicely with this is when we take a look at the 2-year note, which is this black line over here. And what I've done is I've overlaid it with the Fed funds rate. And generally what happens is, let's get this ellipse again, is that when the 2-year drops below, we typically stop seeing rate increases. Okay, we typically stop seeing rate increases. And if I go all the way here, the 2-year now is signaling perhaps the stop of the rate increases. So I'm not sure what's going to happen on the 22nd of March. On the 22nd of March, we're going to get the Fed's next rate announcement. I did look at the probabilities this morning. The probabilities this morning suggest that there is a 60% chance, I think it was 62% chance of a 25 basis point rate increase. But then I read there's a 60% chance that there's no rate increase. So the probabilities I saw 60% chance of 25 basis points. I think we're getting pretty close to the apex of the rate hiking cycle. So if we're getting pretty close to the apex of the rate hiking cycle, the question is then, do we get rate decreases towards the end of the year, which is what we were talking about at the beginning of the year, when we had about 2 months of really good accumulation. Then we've had a vicious pullback because we had that non-farm payroll that came in at 517. It's been revised downwards to about 504, I think, at the moment. The inflation data does seem to be moderating somewhat. Let's keep an eye on that median. It does seem now as if there's these crises that have also influencing the banking sector. Just to let you know how the crises affect the banking sector. We've looked at the interplay between interest rates and bond prices before. Typically what happens is that depending on a bank's balance sheet or any company's balance sheet, you try and match assets with the liabilities. So if you've got current liabilities, you'll try and match it with current assets. If you've got long-term liabilities, you try and match it with long-term assets. And what happens is, well, if you take your cash and you invest it in a bond, okay, and the interest rate goes up, bond prices fall down. So all of a sudden, your assets have come right down. That's not a good thing to happen. And also what happened with Silicon Valley Bank is they had a lot of current liabilities, and they put all the cash into a long-term asset. So they weren't netting off the time frames. So that was an issue there. But the point is that the higher interest rates are putting pressure on the bond portfolios of these banks. So there's this thinking now that perhaps we're getting pretty close to the apex of the rate hiking cycle. So these are just two interesting charts. One to see that the producer price index perhaps leading the core inflation down. Secondly, that the market seems to be suggesting that we're pretty close to the end of we're getting pretty close to the end of we're getting pretty close to the end of the rate hiking cycle, potentially. And it's saying with SVB, isn't that a really basic error? It's a really bad error. It's a really bad error. That, yeah, absolutely. Short-term liabilities, long-term, but well, Anna, you can see what kind of trouble it landed them in. Didn't it land them into all sorts of trouble? So the answer to your question is, without a doubt, a capital YES. So yes. So there is, I think there is some sort of investigation going on there. Look, again, SVB is not a bank that I'd really followed before last week. It's really taken the headlines, hasn't it? It was an extremely aggressive bank, as far as I can tell. In fact, in an interview, I heard it referred to as an outlier in the way that it handled its money. So, but to me, it seems a really basic error. Yeah. All right. Let's do a top-down analysis with the Nasdaq here. I think it's a fascinating chart. I think that we can learn a lot from it. So the first thing is to go through to the weekly chart. And it's just saying that she heard it had no risk manager for 8 months last year. That's new to me. I'm not sure if that's true or not, but that's new to me. Let's just take a look. Let's just take a look at the last two candles here. So let me bring an arrow here. And this is all. If you guys do this, I think you'll get a good insight on any time frame. What you do is you combine the last two candlesticks, and what you can see is we had a massive sell down in the Nasdaq last week. That was off of the back of this SVB news that broke. I want you guys to take the high and then to take this week's low, and we get the range of the two candles. And then after last week's sell down, so we have the open here. Take a look. Where's the close now? Well, the close is just about here. Well, this is a dragonfly doji, isn't it? We've got a big, it's pretty close to being a dragonfly doji. In other words, we've got this big support tail that's come through on the over the last two candles. We've got 2 days left of trade this week, and of course, with the speed that news is breaking, anything can happen. So this is not a complete candle yet, but you can see that it's sort of a pseudo. Do you guys know what a dragonfly doji is? It's bears sold price down, they lose control to the bulls come back, and the bulls are in control at the moment. If you take a look at the RSI, the RSI is nicely above 50. As long as it stays above 50, I think we're in sort of good ground. If it drops below 50, then we've got to watch that very carefully. I'll actually, let me just make a note here. I'll show you the US banks basket. The FXCM US banks basket's also quite interesting. If we go down to the daily chart here, take a look what's happened. Yesterday, we've got a nice sort of hammer, and it's pushed now into zone 3. Now, this is very important to this this zone 3 here, because all of a sudden things are looking very interesting on the Nasdaq. Very interesting, because if I take a look at this just on a basic vanilla sort of charting pattern basis, it looks as if we've got a flag. What's a flag? A flag's a continuation pattern. So it looks as if we're getting pretty close to completing this flag. So we've had a really couple of weeks since the, not couple of weeks, several weeks, really since the beginning of February, we've had this flag that seems to have been unfolding. It looks like it's about to break out to the top side. It pulled back 50% of the impulse that started off of the December lows. And now, if we monitor this in terms of the zones, the longer it stays in zone 1, which is the upper red, upper blue, the longer it stays in the bullish area, the greater the probability that this turns out to be a true flag. What's a true flag? It's a continuation pattern. Okay, so all of a sudden, we are at a very interesting juncture with Nasdaq. Now let's just put everything we've discussed. We've talked about the fact that inflation seems to be coming down, and we have to look at that more carefully, but the PPI seems to be leading CPI down. The bond market seems to be suggesting we're pretty close to the pretty close to the end of rate hikes. Is it any surprise that we're starting to see the Nasdaq starting to push up? See the Nasdaq here starting to push up. Very interesting, isn't it? So the top-down analysis of the Nasdaq, I think, very interesting indeed. I just want to show you guys the US banks, and then we'll take a look at DAX. All right, I want to just take a look at on the weekly. So here we've got JP Morgan in here, we've got Morgan Stanley, we've got Citi, we've got Wells Fargo in here, and I think we've got something, I think we've got Capital One. So, and they're all about 20%. From the beginning of October through to the end of February, we actually charted a higher trough followed by a higher peak. So the banks were looking as if they were trending up nicely. That's ended. We've got this lower trough in. That's ended. We've got this low trough in. Now, I want to just keep watching this. Okay, I think that there may be there. What's the big bugbear? It's this RSI. The RSI has dropped below 50. If it maintains below 50, that's going to mean continued pressure on the banks. What subsequently happened to the SVB, Signature Bank, and even Silver Key we can throw in there, Silver Key Bank, those are all sort of banking failures. Well, we had Credit Suisse having really come out quite beleaguered yesterday, and the reason it came out, it delayed its annual report, and then the annual report was released on Tuesday, and it came out with material weaknesses in its controls. And then we had in an interview on Bloomberg the chairman of, I think it was the chairman of Saudi National Bank, saying that they wouldn't invest any more capital into the Swiss bank, and it subsequently tumbled. the comment on Bloomberg really came, I'm not sure if it's as innocuous as it first sounds, because they don't want to take a 10% holding. They're around about 9% of Credit Suisse. They don't want to take 10% because there's a whole lot of regulatory changes that come with that. That's really what I took away from that. But since then, Credit Suisse has tapped a 50 billion euro fund. It's through the Swiss National Bank, and the Swiss National Bank and regulators have come back and said to Credit Suisse, its liquidity and its capital ratios are adequate. So they are looking at its ratios. The ratios are adequate. So we're just going to have to see if that now presents some sort of value in the bank's index. So it's really dropped. We want to see if this RSI pops above 50. I'm not saying it will. I'm saying I'm looking to see if it does. If it does, then potentially we have value here. You know how we can look at this? We could look at this in terms of Stan Weinstein's. Here's the distribution. Here's the markdown. This could be some sort of accumulation. One problem with it, with that argument, we've got this lower trough. Okay, the lower trough's not good news for it. So we're just going to have to watch that very carefully. Let's go through to the DAX. All right, so again, I think Mia was pretty spot on yesterday with regards to the daily. I've taken out the rectangle here because I don't want to be referring to that pattern anymore. I don't see it as a rectangle. We've broken down out of it. What we need to look now is to see if there is some sort of support that comes in around about these levels. So let's see if we get some support over here, and then we can rework it. This got hit really badly with regards to the Credit Suisse action yesterday. If we go back to the weekly chart remains in uptrend. Okay, we remain in uptrend. Again, this is we're waiting to see if we get the reference candle reversal. We don't have signs of this reference candle reversal yet, but I think this looks corrective in nature. Okay, if this is corrective in nature, well, then it provides opportunity, becomes exploitable. So let's just keep an eye on this because, as I say, the Credit Suisse has access now this facility, this 50 billion Swiss franc facility. One more to look at, and that's going to be the euro. We're going to have the ECB out today. I think that the euro here is also, there's a lot of uncertainty about it. What I think we've got to look is to see if we still have this as a higher trough. I don't know exactly how this is going to pan out, but let's just, the way that we can take a look at it is by merging the last two candles, and you can see something quite remarkable when we merge the last two candles, right? We've got here a doji, and we've got here a, let's call it a long-legged doji. Well, you put these together, what have you got? You've got a doji. So over the last 2 weeks, you basically got uncertainty. So if there's one takeaway you can have with regards to euro, is that there is uncertainty around it. What does that mean? Well, it means that we're going to have to just wait and see for some sort of price action to help us out here. The trend does have a higher trough, higher peak. We're very close to breaking down below this higher trough here. So let's just keep an eye on that. If it goes below this higher trough, then all of a sudden it becomes a lower trough. I think the fact that the inflation story might be moderating, and I think the fact that the bond market suggesting that we're very close to the end of interest rate hikes probably is bullish for the euro, and I'd like to see a real body, a blue real body moving up here. So we're going to have to come back to this tomorrow and see how it looks, but at the moment, there's one thing we can say, it's uncertain. If we go through to the daily chart, Guess where it's trading? In the middle of no man's land, in the neutral area. It's uncertain. So the tough environment continues. No real direction, except the Nasdaq's looking quite interesting. We want to keep an eye on the Nasdaq. But there is, of course, now we've got to take a look and see if there's value that's coming through on the US banks, value that's coming in the DAX, and potentially if we can get some sort of certainty coming out in terms of the euro. All right, so that's where we shall. That's where we'll end this morning. If there's any questions, go ahead and type those in. Any questions, go ahead and type those in. All right, nothing coming in. So let's wrap up here, guys. Want to wish you a good day ahead and a good evening. We shall chat tomorrow. Thanks very much, guys.